Are you looking to invest like the professionals without the buyer's agent price tag? DIBA helps you save time and money by filtering out 99% of markets within Australia to give you the top 1% of Australia's suburbs set for strong returns. The Do-It-Yourself Buyers Agency save you thousands on buyer's agent fees and months on courses. Instead, for a fraction of the price, you can search for highest performing markets, target the right property for your investment goals, and be guided through the purchase process. DIBA, the ultimate tool for the everyday investor. Sign up at www.diba.com.au to put the power back in your hands. That's www.diyba.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Good everyone. How you going? It's Phil Tarrant here. I'm the host of the Smart Property Investment Show. Back again, another installment of the Smart Property Investment Show. Been doing this for many, many years. We surpassed 10 million downloads a little while ago. You probably saw a lot of the fanfare around. It's nice to celebrate milestones. If you don't stop every now and then and look back and go, okay, you're probably marching in the right direction. But I reckon the speed it took us to get to 10 million downloads to 20 million downloads will be a lot faster. And that's typically what happens in something which is in a accelerated scaling scenario. It happens in business, it happens in podcasts, it happens in the media, it happens in social media platforms. And there's a lot of science to it. And there's some boffins that actually map this stuff. But really enjoy doing this. It's good fun. I like when I get to reconnect with people I haven't seen for a little while. Today's going to be one of those chats. And nice to get my finger on the pulse of this particular business, which, you know, I've been watching from the wings for many years. And I've just had a real quick chat with their founder offline, and I was surprised. I knew they were going somewhere, but I didn't realize with the same speed. So maybe this is the marriage of speed and scalability and accountability and looking for those opportunities and taking them when they come in front of you, but also dealing with the minutiae that comes with it as well. And that's just the nature of the beast. Joining me in the studio. It's a double podcast because I'm back with my regular discussion around mortgage finance with Eva from Finny Mortgages, but we're teaming up with this podcast with Goose McGrath from Dashdot. We're going to talk things all through finance, buying property, building portfolios, how to use finance as an enabler to build your portfolio quickly, plus everything else. Eva, Goose, how you going? You well?
Good. Hi, how are you? Yeah.
It's great to be here again, Phil. Nice to see you.
Mate, it's really good to see you. You haven't changed, mate. You're looking fit and healthy and smiling and got a spring to your step. It's good to see you back, mate.
Yeah. Likewise. And yeah, of course, why wouldn't I have a spring in my step? You know, we're doing the best thing in the world. We're helping people to build wealth. We've got a cool business. We're going quickly. Life's good. A lot to be happy about.
Is there anything bad going on, mate? It's all good. I imagine you're probably always that, it'll be right. We'll sort it out type of guy.
So it's an interesting question, right? Because there's always, like, depending on how you look at it, there could always be something wrong. You know what I mean? But the way that I genuinely see it is that all of the challenges lead to success and greatness and fantastic outcomes. And so would I say that every single moment of every single day is filled with nothing but endless, abundant joy and no stress? Then no, I wouldn't say that that is true. But the beauty in life is found within the beauty of contrast. And so I find that the stresses and the challenges actually give heightened sensation of the happiness and joy. So on balance, I think it's a good mix.
Well, mate, as long as the scorecard is in your favour and not the other way around, that's when you probably start working out something that's not right. And no doubt a guy like you will change that pretty rapidly. And Eva, from what I understand, Finny Mortgages helps out Dashdot clients with property finance. Is that correct?
Yes. So we've been in touch for a little while now and exchanging, I guess, wisdom and education for clients and helping them to not only buy just a property, but build and create wealth. And most of them now are looking to build portfolios. And that's, I think, quite important to discuss today is how people can leverage properties and finance to get where they want to be, I guess, quicker.
I get a bit excited when I chat to Goose, Eva. So if I seem to spend a lot of time talking with him today rather than yourself, please don't take that as a snub. We catch up very often, but I'm really I've got an itch, I've got a scratch to work out what Goose is up to and how he's sort of growing and evolving his organization. And I take the point, property is a game of finance. I take the point that in order to build a portfolio, you need to have a solid team around you. And I've been talking about that for many years. Goose used the term before becoming an era of get one and you're done, i.e. you only buy one investment property, then you stop doing what you're doing on that basis. You don't really need a team. It's very transactional. Get yourself a property, sit there, hope it's a good one, and you can wait to see what that does for you. But most people I know, and no doubt Goose will concur with this, is that once people buy one investment property, it's not normally where they want to stop. And most people that choose to use the capabilities of property strategists, investment experts, portfolio growth partners, typically have a hunger that they want to satisfy, and they want to go. So you need a good accountant, you need a good mortgage broker, you need other key people in your team if you're doing renos and all that sort of stuff, builders, etc. One of the key capabilities obviously is the traditional buyer's agent. But Goose, I think you probably don't use that monkey in your own business. It's more than just being a buyer's agent these days, isn't it?
100%. I want to pull apart the buyer's agent thing in a minute, but what you talked about there was really, really interesting, right? So when people think about investing in real estate, everyone has the same goal. Like, I haven't met a single person who doesn't have ostensibly a goal to create freedom. Now, they may have variations of what that looks like, but broadly speaking, it's the same thing. Why would you invest in anything? Because you're trying to create more freedom. Now, people like real estate and they want to build a property portfolio that's going to give them the freedom, but the statistics point to the fact that most people never do. So 71% of property investors get stuck at the first property. And you pointed out that when people get the first property, they usually don't want to stop there. But here's the thing. Most people don't have a choice. They get stuck there. And that is a big shame, because if you actually think about what is required in order to really have a portfolio that's going to deliver the kind of freedom that you might desire, it's probably going to be something like 5 properties. A lot of people say 10 properties in 10 years and $100,000 in passive income. And that's a great goal, but you might not need 10. It might start at 5, and 10 might be great and 20 is better and all of that kind of stuff. But the reality is only 1% of property investors get to 5 properties, which means that if we accept that is kind of like the baseline for getting to freedom, that means 99% of property investors never get there, which is a really, really big issue. And to your point that you made earlier, and we started discussing offline, was this idea that buying properties isn't enough. Like, just buying a house is not enough. Everyone thinks, I want to be a property investor, therefore I'll go buy a property. And if you're just going to do that, you don't need a team. Like, you don't need to find an expert mortgage broker like Finney who just gets property investment. You don't need to do that. You don't need to go and find a property investment expert or advisor or a portfolio growth partner. You don't need that. You can just go on realestate.com, find something that's within your budget and have a crack. You can get any old mortgage broker to do whatever. However, there's a really big difference between the people who get stuck at one property and the people who get to 2, 3, 4 and beyond. And that's actually taking a strategic and portfolio-based approach. And that, I think, is where most people get let down, even when it comes to the kind of buyer's agent model. Now, what is a buyer's agent? A buyer's agent is someone who will effectively go property shopping for you. It could be for your dream home. It could be whatever. But effectively what you're trying to do is just trying to outsource some of the decision-making. The problem with that doesn't necessarily mean that it is a strategic approach. Anyone could go buy a house. You're effectively just getting somebody else to go buy a house for you. Now, we at Dashdot, we very much walked away from being even called buyer's agents, because we've taken a whole portfolio approach. We've built specific technology that is designed around helping people to build an end-to-end comprehensive strategy so they know they won't get stuck. Because there's only 3 constraints in a portfolio. There's access to capital, access to cash flow, which includes your income, as well as income from assets, and access to borrowing capacity. So understanding how to solve for those 3 specific constraints is the thing that will get you from 1 property to 5 properties and beyond. Obviously, in order to do that, you need to have a clear strategic plan, and you need to have a team of experts who understand how to navigate those stages, such as an investment finance broker.
So where does it all start on that basis, Goose? Does it start with the investment finance broker that works out the issue around access to debt and probably your capital capabilities? Or does it start with a property strategist or an investment expert, a portfolio growth partner, someone like yourself, and it goes the other way around? Or doesn't really matter? Either one works.
Well, I think it all starts with actually working out what the goal is, right? Most people never actually take the time to work out what the goal is. So the idea of like 10 properties in 10 years and $100,000 cash flow is probably the most common thing that I've ever heard speaking to thousands of investors over the last 5 years, right? But the reality is that's a borrowed dream. Nobody actually knows why that's the number. Nobody takes the time to think about it. Nobody takes the time to work it out, because the reality is you might be able to create the outcome you want in your life simply by working 3 days a week less or 2 days a week less. And that's a very different goal. So working out what you want is fundamentally the most important thing. And it is the thing that the fewest people actually ask themselves. Because if you ask yourself, like, why is it 100 grand? What is that going to achieve for me? How am I going to live my life? Right. So I think starting with the end in mind is the first thing, because if you don't know where you're going, how can you possibly build a strategy to get you there? Because what is the best property for you, Phil, might not be the best property for me. So you can't even argue that buying the best property is going to be the right outcome, because like, how would you know unless it is going to be aligned with the strategy? And how do you know if the strategy is correct if you don't understand where you're going? So starting with the end in mind is fundamentally the most important thing, getting clear on that. Then I would suggest engaging with someone who can take a portfolio approach, not to sort of like plug us or whatever, but like the reality is starting with a portfolio plan is probably the best place to be, because that's actually going to help you to define where the capability gaps are. Do you have enough capital? Should you be buying one property or four or whatever the case may be? Now, as part of that process, you need to understand the finance, because you don't go to the shops without taking your wallet with you, right? And you could have the best dream in the world. Okay, I'm going to go build a property portfolio and I'm going to go and buy 10 properties. And you discover that you've got $0 borrowing capacity. Okay, well, maybe you can't start. And so it's almost like you have to kind of start both conversations at the same time. You need to find someone who's an investment expert who specializes in a portfolio-based approach, and also simultaneously start the conversation with an investment-based broker like Finny, and preferably have both of those people talking to each other, because they're going to be part of a team. Because then those two parties can actually talk to each other and go, hey, we've got Jenny here. This is Jenny's situation. Here's Jenny's goals. How are we going to work together to get her there? That is when you get actually the best possible outcome. Because building a team isn't just about finding expert individuals. It's about connecting those individuals together. Because unless they're working together, it's not a team. It's a bunch of individuals, and you're just the hub. So, which is why I think the relationship between an investment-focused broker and a property investment expert is so important. Because it's not just like one gets finance and one gets houses. It's this unison of energy and focus and capabilities and skills that can actually drive clients to their best outcomes. I think one of the biggest issues that people face is this idea that 99% of property investors never actually get to their goals. That can be solved if you know how to build the right team and they work together, not one versus the other.
Yeah, I completely subscribe into that. And I would sort of augment that with, as a property investor myself, with a pretty large portfolio and often a negative view towards investing in property because I get sick of it and I don't want to deal with it. And be careful what you wish for sometimes if you want to be a property investor, because if you end up with a lot of property, it's not a passive investment. I tell you that for nothing. That said, if you've got a good team around you who can keep you accountable for getting done what you need to be done, they can be a huge enabler for keeping you moving forward, or keeping the ball moving forward without the excessive amount of your time invested into the process. So that's the best way a team could operate together. So I completely subscribe to your point, is that you want your team working with each other. You don't want to be sitting with linear relationships back and forth to you, with you as a node in the middle that all information needs to pass through. You want to empower them to talk to each other and give them the permission to share the information you're happy for them to share in order for them to do their job properly. And you've got to work out also, not all people work together effectively as a team, like any team-based environment. So good professional operators typically can work with most other professional operators, but you need to make sure they've got an attitude of collaboration and an attitude towards empowerment of the actual investor. That's what works well. It sounds that's sort of working pretty well, even between Finny and Dashdot, those dynamics. You're happy to work directly with other professionals rather than having to go always back through the investor?
Yeah, that's right. Well, there's a lot of legwork that we would do for the clients. And I think both Finny and Dashdot have very strong system in place now where everyone is kept in the loop. No one is forgotten at any stage. So everything keeps plugging along without anyone having to really think about it or do anything. And the client doesn't have to stress and try to get information from, someone to someone else and just gets lost in the middle. Sometimes they don't even understand what's happening. So yeah, it is very important. And I couldn't say it better. Like, if you're looking to build a portfolio, the team around you to do the work for you is essential.
We'll just go to a break. Stay with us, everyone. Back in a moment.
Crush the burden of rising mortgage repayments. We understand that managing your finances can be overwhelming, especially as interest rates continue to rise. With access to 70 plus lenders, our team of specialised brokers will find the best rates for your specific needs. Count on us to secure a lower rate swiftly, giving you the confidence you deserve. Book an appointment with one of our experts today to protect your financial well-being and secure your future. Call us now at 02 8866 2444 or visit our website at finny.com.au.
What's the ideal scenario? And I sort of painted my scenario, and that's a product of circumstance and bandwidth and time. Like, I know about property and I get it, but I'm not doing it myself, and my time's better spent elsewhere. Number one. Number two, there's smarter people than me that can do it. So what's an ideal relationship for, whether it's on the portfolio growth side or on the finance side, with the investor just going, I'm in, I've got a goal, I've got the strategy in place, you guys do the heavy lifting on the execution. Is that how you like to work, or do you like to actually have the input, Goose?
So let me talk about a couple of things. So when we work with clients, we don't take a shopping list, right? So it's usually the other way around, right? We actually explain to people like, hey, this is actually what you're going to need to do to get to your goals, right? So there's that. But I read a story about Richard Branson once, and somebody asked him, he's obviously the CEO of multiple companies, hundreds of companies, billions of dollars, all of this kind of stuff. Yet he lives this life where he's living on Necker Island and kite surfing, and he's the billionaire that every billionaire wants to be like, right?
Yeah.
So, and somebody asked him, and he said, what's the secret? Like, how do you do all of this? How do you create all these companies, and how do you create all of this success, yet you don't have all heaps of stress? And he said, well, it's really simple, right? You got to cast a compelling vision of the future, i.e., what's the goal? You've got to find the best people in the world, and you've got to give them the resources to do their job well, and then you get out of their way. It's that simple. And it's the same thing goes for property investors. Property investors can think about being the CEO of their own kind of life and portfolio. Now, the CEO shouldn't be getting in there and tinkering on the things and, speaking to all the property managers and all of that kind of stuff. Vice versa, if you're a property investor, you don't need to become a finance expert. Like, that would be madness. Like, why would you try and go and become a finance expert? Or in fact, why would you try and become a property investment expert? There's always going to be someone who's better than you. You're just never actually going to be the best, because you're trying to fill all the bases on the field, and it's not going to make sense. So what you need to become really, really good at is finding the right team and finding the best people in the world who are best in class at what they do, and then empowering them to do their best work and listening to them. And that's kind of the real key. And so the relationship, I think, needs to kind of exist like that. The same thing goes with Dashdot at the moment. I mean, look, we've significantly grown. We've got a reasonably large team, and I am now in a position where I actually I'm not necessarily trying to make every decision. What I'm actually trying to do is listen to my executives and say, okay, cool. So what is your take on the situation? What do you think is the right move to do? Then I'm the filter to go, okay, is that decision aligned with the vision? And if so, then we execute it. And I think property investors could take a lesson out of that book in elevating the thinking to then think about that relationship. That relationship then relates to how does the investment expert speak to the finance expert. So, for example, within an organization, you would have different departments talking to each other and making good decisions, and then coming back to the CEO and going, hey, so we've talked about this. Here's the plan. We've got this strategy we're going to grow the company. In this case, the company being your property portfolio. Let's go make this decision together. And I think one of the biggest issues in this is that property investors specifically they can't get themselves out of kind of like an employee mindset where they think that the value is only created if they're doing lots of work. And kind of to your point, Phil, property investing can actually be a real pain in the like the finance process can be annoying. Then you have all these properties and you've got property managers going, this thing's broke. It can be really frustrating. And so the way that you elevate yourself above the madding crowd is to put the right people in the right places and empower them to do their best work. And if you can do that, you can suddenly go from fearful to empowered, and you can suddenly create a portfolio that actually gives you the freedom that you desired, rather than just creating a portfolio that gives you a different kind of job.
Yeah. And the key to that, and that all makes a lot of sense. I think most people will be listening to this and driving a car, walking a dog, or at the gym, sort of nodding their head going, whatever. But the key to unlock all of that is trust. And I think that's where most people have the biggest concerns or the biggest handbrakes to driving growth, and not being one of those 90+% of people who only ever get one property and never realize their property dreams. You need to unlock trust, but how do you assume trust if you're using with the right professionals, or how do people earn trust? Because once you trust someone, when it's trust in a relationship, the terms become negotiable. Something that Tom Panel says quite a lot, right? But it's hard for people to trust. And if they're not in business, and a lot of property investors, this is their inverted commas side hustle, Goose, where they can actually be the CFO and the CEO of their own business, is investing in property. If you're not used to delegating, if you're not used to inherently having trust with people and saying, I get it, go, do what you're doing. Let's get a cadence for how we operate together. It's very, very difficult. So how do you trust your team, Goose, is the key thing.
My point of view is that trust is not earned. Trust should be given willingly up front. And that is a belief that served me very well. If you trust people first, unless proven otherwise, you set yourself up for a much happier life. Does that mean that everyone is trustworthy? And does that mean that everyone meets the expectations that you set out? No. Like that's an unreasonable worldview to have, right? But it doesn't mean that you should be skeptical of everyone. And I think that from what I have seen in life, in business, in real estate, the people that are most skeptical and the most distrustful are the ones that go the slowest and typically usually don't get to the outcomes because they believe inherently that the world is out to get them and they are there to try and uncover a hidden truth that nobody else can see, which is not a particularly healthy way to exist in the world, in my humble opinion, right? As someone who has a generally optimistic worldview. So that being said, that doesn't mean that you just go and, doesn't care, just engage with anyone or whatever. You need to build systems to help you verify whether or not somebody is aligned with your values, because values are a greater determinant of trust building behaviors than any other kind of characteristic. So for example, let's say you've got an investment company. Maybe they've bought 1,000 properties and, blah, blah, blah. They're great at what they do or whatever. If you don't share a common set of personal values, that will inevitably be a toxic relationship. Let's say that they are aggressive. They've got a mentality of just getting deals done and not really caring about their clients and whatever. They might get good results, but the results won't matter if it causes you disharmony and distress. Vice versa, you can find someone who's going to be heavily aligned with your values and the way you see the world, and that's actually going to create a better relationship. And so, hiring a team, which is effectively what you're doing, you're building a team, finding a mortgage broker, finding an investment partner, all of that kind of stuff is about finding people who you believe not only have the character, but the competence to get you to where you want to get to. So this is how I think about building a team. Like, do they have the character and the competence, and do we have a shared set of values? And the competence is important because you need to know they can do the job. They could be the nicest person in the world, but if they don't have a track record of actually doing anything good, then it doesn't really matter. They're just nice people. So I think kind of leaning into those kind of three areas, character, competence, and values, is going to be a really great indicator of where you want to go. And that's going to help. Like, for me personally, I don't want to associate with people who aren't prepared or comfortable thinking as big as I am, or aren't prepared to at least allow me to think as big as I do, because I tend to find that creates a whole set of limiting beliefs. So that helps me indicate the type of people that I want to surround myself with. The same thing goes. And again, I think people can kind of overcomplicate some of this stuff, and they think that there's got to be a 70-point checklist for everything. And it's just not true. Like, in fact, most of the time you need about a 3 or 4 or 5-point checklist. And simplification is usually the answer to getting outsized results. In fact, if you want to 10x anything, you do less things, not more things, which is something that most people don't realize. They think if they're getting 2x results, like I'm growing my property portfolio, therefore, I want to get greater results, then they've got to do linearly more effort. When in the reality, you've just got to work out how to do less things and do them better. Same thing goes when you're thinking about how to develop the right relationships and build trust. But me personally, I start with trust.
And everyone, there's a lot of podcasts, a lot of people sort of talk about property investment. Everyone talks about mindset. But I think what we've really discussed there is the real heart of mindset as a property investor. And there's two parts of it. Number one is that Goose sees the world. I don't know how Eva does it, but Goose sees what he gives trust he gives trust at the front end on the basis that it's assumed that the person is trustworthy and therefore acting in your best interest. The other side of that is people go, no, you need to earn trust, and you're a cynic until the point in time. And I reckon it's a 50-50, right? It depends how you're wired, what your experience, your upbringing, all this sort of stuff, right? Where are you, Eva?
I actually very much like Goose. I trust everybody until I shouldn't, and they have to give me a reason not to.
Okay.
And most of the time, it works out well. I guess you attract also the type of people that would fit into that world.
Yeah. I'll just jump in on that as well. Like, statistically speaking, the most successful people are optimists, not pessimists. And the reason for that is that they believe that things are going to work out. Therefore, they take more opportunities because they're not sitting there thinking, this won't work out for me, therefore I won't start, which is, we're talking about the statistics of property investors that get stuck at one property. But, the reality is the single largest cohort of investors by far, like by several orders of magnitude, is all of the investors that have got 0 properties that are sitting on the starting line just trying to work out how to get going. And a significant cohort of them, they're stuck in fear. They're stuck in doubt. They're stuck in going, what if this doesn't work for me? And so they never actually take action. And so the most successful people are optimists because they, at least at a fundamental level, believe that most things are going to work out. Therefore, they should just do more things. And I think that actually kind of points to why some people become more successful over time.
Yeah, and it's a really hard one to nail down because people always go to me, say me as a property investor, what's your goals, where you going, blah, 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 blah. And I'm like, you know what? Like, if I just do the right stuff over time, it's all going to work out okay. Like that's my view towards things, and obviously a lot more thorough than that. But, I'm a big proponent of strategic patience, right?
Mm.
You do the right stuff and you do it well and you get the right people to support you on that journey. Eventually over time, it's all going to work out in your favor. And that's sort of a life philosophy, I guess, for me. But, the point being is that trust up front rather than trust is earned. That's one way of viewing it. But to your point, I think is very good, Goose. It's around sort of the competency of people, the value that they create. You need to have value alignment with anyone that you're working with. And what I find in property investment is that if you immerse yourself, if you do the right stuff and you have strategic patience, you do the right stuff and you get off the starting line, you make your first move, might not be perfect. You want it to be as good as possible because you don't want to be one of those 70+% of people who get stifled at one property. They can't because they're normally only one property because they bought the wrong property at the front end. There's no excuse these days for buying wrong properties. If you've got 2 ears and you can listen to a podcast, there's a hot tip. But if you get off the starting line and you start down a pathway of finding yourself one really highly engaged and connected person that can support you with property investment, it might be your investment partner, it might be your mortgage broker. Through those networks, you will radiate a certain sense of connectivity with other trusted partners where you can just accelerate your potential. Typically, a good person that operates in finance, typically a good person that operates in property investment will have other people that they've worked with in the past, and it just grows in from a groundswell from that. You must see it in your business, Goose, where you have clients that have a lot of commonality of the other people that they have supporting them on their journey outside of just Dashdog.
Well, yes and no, because again, like leaning back into the numbers, we've helped a lot of people so far, and most of our clients end up going on to build, decent portfolios. But the reality is most people are in that 0 to 1 cohort of investors, which means that they typically they either haven't gotten started yet, so they're at 0, or they've gotten one property, therefore they haven't actually, and they probably haven't built a team and probably don't really have a clue what they're doing. So what we tend to find is that most people don't have a team. Right. And then we help them build a team. But to your point, we've actually had to take the time to then go, okay, within the entire ecosystem of people that exist in the spaces of things like finance and conveyancing and mortgage broking and property management, all of these kind of things, is like, how do we find the best people? Right. Because those people are an extension of us, and going to be an extension of the relationship with the client. So we've had to go through the process of building that team. So now what we tend to find is that, like a lot of our clients do have a commonality. There are some key players and a lot of in the industry, and some who are exceptional at what they do, and some that have been on this show as well. So you do tend to find that the cream rises to the top in most occasions. But that doesn't change the fact that most people, when they're starting, don't actually have a team, which kind of lends back right to the point we're making. It's like in order to get to where you want to get to, you've got to build the right team around you. Otherwise you won't grow.
We'll just go to a break. Stay with us, everyone. Back in a moment. So do you think when say you have a new client join Dashdot, do you think is there often a misalignment between where they are right now and what they can become, and misalignment by way of people who are too ambitious or not ambitious enough? Like, how do you get people off that starting line into probably number one and accelerate them into the future? Is it a tough job for you and your team to shape perception of people if they're inherently risk averse, or they inherently don't have the skill sets to grow and evolve, they inherently don't have the mental capacity or the mindset in order to grow? Is that something you sort of hit brick walls with your clients?
No, not necessarily, right? Because neither myself nor my team have a dogmatic approach to what success should look like. We don't tell people like, this is what success looks like, so whether you like it or not, strap in because this is where we're going. That's actually not the process at all, because success looks differently for different people. Someone who's got a really low risk profile and a long time horizon might be happy to go slower. And someone who's got a higher risk profile and a really short time horizon might be really want to go faster. Somewhere with each of those individuals, we would try and move them closer to the center. I don't think, like we always try and help people anyone and everyone wants to achieve their goals as fast as possible, right? So if you can achieve your goals as fast as possible whilst minimizing risk, why wouldn't you want to do that, right? It's very simple. You would. But within that lies a couple of key dynamics. There's a risk element, which is important to understand, as well as the goals element. So the achievement is okay, but if you wanted to build a 10 property portfolio, that's great. But what if it's going to take you 100 years, or what if it's going to take you 2 years, right? So both of those approaches would be significantly different, massively different in the approach. But I think aligning people to what they want is the kind of biggest thing, because people don't, as I mentioned earlier, don't actually take the time to work out what it is. Even if they think they know what it is, they haven't really put a thought into it. And so the arbitrary goal setting, I think, is kind of the biggest hurdle for most people. And in fact, I was talking to someone yesterday who had engaged with our process, and they're a friend of mine. And so they were giving me some feedback. They got a portfolio plan and all of this kind of stuff. The biggest problem was they had no idea what they wanted. And so then they were like, oh my God, like, is this even right? And so if it's all right, I've got a little formula that people could use. It might actually be an actionable kind of takeaway.
Yeah, sure. Yeah. How do you get your hands on it? Are you going to tell us verbally?
I'll just tell you, and then, we can. It's just it's a formula that you can just listen back to this. It's sort of slightly complicated, but it's not that complicated. Most people want to work out what is going to be required for them to not have to show up for work again, which is the key element of freedom: time. Right? What people want is time, not money. If you had $1 billion in the bank, but you had to work 24 hours a day every single day, 365 days a year, would you be happy? No. Right? So what you're actually looking for is not the money; you're looking for the time. And so if you imagine just for a moment that you wake up tomorrow and everything's the same, your current set of circumstances is the same, you live in the same house, you're eating the same food, you're wearing the same clothes, nothing about your life or circumstances has changed, except you don't have to go to work anymore. All of a sudden, you've got back all of your time. Well, how does that make you feel? Like, what are you going to do? That's going to be the most liberating thing in the world, to realize that you never have to work again. Now, you haven't suddenly arrived in a palace of luxury and flying private jets and doing all this kind of stuff, but you've got specifically the most important thing. Most people would want to start to do that passion project or spend more time with their kids, or all of the things that actually matter. And so the question then is, like, how do you get to that? I like to call that the minimum viable freedom. Now, minimum viable freedom isn't about your aspirational outcomes of, like, do I want 100 grand or 200 grand or 300 grand, or do I want $10 million in the bank? That's great. Those numbers might be awesome. What you really want is the freedom. The way to work out your minimum viable freedom number is to work out what are your current living expenses. And the easiest way to do that is to look at your last 3 months' bank statements. How much money did you spend? Divide it by 3. That'll give you an average monthly living expense. That's how much money you spend. And just be real with it, because what you're not trying to do is optimize for the minimum possible cost. It's like, how do you currently live your life, and would you be okay if you maintained it? So current living expenses minus any direct work-related expenses. Now, when I say direct work-related expenses, you might spend several $100s a week, I don't know, getting to and from work, or maybe you've got to buy suits. Maybe you have to have a second car so that you can drive to work and your partner can pick up the kids from school. There's all of these work-related expenses that if you didn't have to work anymore, you could get rid of them. It could be public transport. It could be buying lunches because you never have time to make lunch before you go to work, any of those kind of stuff. So remove any of the work-related expenses from your current living expenses. So that'll give you a number. Then you want to multiply that number by average annual inflation time to the power of years to goal. So if, I know inflation has been high recently, but for example, if we said that the average annual inflation was 3%, and let's just say your current living expenses are $80,000, let's do some maths here. If your current living expenses are $80,000, and if your work-related expenses are $20,000, just for simplicity of the formula, then that would mean that your living expenses is 60 grand a year. If you did $60,000 times by 1.03, if we assumed that 3% was the average annual inflation rate, to the power of, which you can do on your fancy calculator, let's say you want to achieve your goal in 5 years' time, that would mean that you would need $69,556 in passive income, right? And that's the easiest way to work out what your actual number is. Now, the reason that the years to goal thing is really, really important is because that's going to dictate your capabilities. Because you might be starting at $0 passive income. So can you get to $69,556 in passive income in the next 5 years? Maybe not. Maybe the timeline's longer. Maybe you've got kids that are 10 years old, and what you're actually trying to optimize for is a life beyond kids, in which case your time horizon might be 10 years. Nonetheless, it gives you clarity on what the goal is. It gives you a very specific number that's optimized based around your personal circumstances. And again, it's not creating financial luxury, but it's creating financial freedom, which is the real goal.
So that's minimum viable
freedom formula.
Minimum viable freedom formula. You've thought a lot about that, haven't you?
Yeah, I think a lot about a lot of things, Phil.
When did I like the concept, right? And it's not a new concept, but I think the way you've framed it is quite sensible, because, you've got to start somewhere, right? And if that's an initial goal, I'll tell you what, when you get the 5 years, you probably, like most property investors, go, I'll keep going. I'll keep doing my, anyway, it's all a horse of course.
It's not about crushing ambitions, just to be clear. It's not about saying that should be your only goal.
Yeah.
But that allows you to work out what you need to get to in order to then, if everything else above that is bonus.
Did you work it out yourself? Have you worked out your minimum viable freedom? I'm sure you've done it yourself and gone, no.
I definitely have. So I know what my number is. That's for sure.
Yeah. I haven't done it yet. Probably should do, but just conscious of time. Goose, we're going to have to get you back on, mate. I do enjoy chatting with you. It's the philosophy of property investing, and I think we can have a good yarn. But we've run out of time. Sorry, Eva. I've been hogging Goose through discussion. So for me, key takeaways: minimum viable freedom. I think that's a good number. Do your math. Go and trim back in. Hey, how do people sort of connect in with you and your team, Goose? What's the best way if you want to have a yarn?
Just head to the website, dashdot.com.au. It's the best place. There's a spot there to book a call and fill in a form and have a chat with one of the team. And they can actually just kind of help you to identify where you're at. A lot of people don't know. So that's why we do a free 15-minute consultation to actually go, okay, where are you at? And what do you need to unlock first? And oftentimes what happens is the very first thing they need to do is go and speak to a mortgage broker that gets investment like Finny, right? And so if you're not sure, if you want to get started and you're just like unsure, because some people don't even know, like, have they got equity in their property or not, things like this. So if you want to get started in investing and you just don't know what the first step looks like or what your capabilities look like, can it be done? Are you in a good position? Do you have everything you need? Then you can just book in a free 15-minute consultation. It's genuinely a value-based call. It's not like a sales pitch. It's like, where are you at? Where are you stuck? What do you need next? Roughly 70% of the time, most people don't have their finance ready. And so the very next thing that we do is say, go speak to an investment-focused finance broker so that they can get what they need, and then we can kind of help them move forward.
You've got to get to the starting line. And if you're unsure and you're uncertain, you want to do something, but you don't know where to do, I would absolutely take up on Goose's offer there to have a yarn to his team, because you don't know what you don't know. And once you sort of know where you're heading, you can start making a decision around it. I'm going to have to sign off there. Goose McGrath, mate, great to see you from Dashdot. Stay in touch, mate. We'll see you soon in person, but let's get you back on the show for a yarn. And Eva, thanks for your time. Thanks for teeing up with Goose today.
Laurie, thank you.
Thanks, guys.
Nice one. Thanks for tuning in, everyone. Remember to check out smartpropertyinvestment.com.au. Remember, we've got our Fast 50 report. It's a bit old now, but we'll see how those suburbs are performing. I'm quite keen to see where Goose is buying at the moment, but that's for another time, no doubt. Social media, you'll find us at Smart Property HQ. Thanks for tuning in. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.